And my next guest is advising her ultra-high net worth clients to stay invested in mega cap tech this year. Let's bring in Angela Mwanza of Rockefeller Family Office with her 2024 market playbook, ranked on Forbes' 2023 Best in State Wealth Advisor list. Welcome to our program. It's nice to have you.
Great to see you, Scott. Thank you for having me.
So first off, just give me your general view of the markets as we embark on this new year.
Well, the general view, I mean, if I think about where we were last year, we were standing before the mountain. The Fed was about to start raising rates, and we weren't quite sure how the markets would absorb that. Look at where we are today. We're talking about a soft landing. I'm not sure if we're 100% doing a victory lap on that yet, but we feel that we're in a very good position for our clients in terms of being able to invest for the global economic growth that we anticipate, to be prepared for that volatility that's coming, to be able to invest on an absolute return basis. And I think we'll be able to put some good protection in place for clients' portfolios. And overall, I think this is going to be a very big week for determining which direction we're going to go. We've got financials on their earnings reports, and also we have the CPI print coming up on Thursday, so that's a biggie.
Is it right to be overweight at U.S. equities right now?
I would say we're more neutral on U.S. equities, but if you ask me U.S. equities versus international, I would say I would prefer the U.S. I think international is a little bit more sensitive towards some of the geopolitical risks, and I think economically they're a little bit behind the U.S. in terms of their recovery. So I have a preference for U.S. You did mention mega cap tech. It's funny, coming out of a year of 2023, the S&P 500 did great, up 24.7%. The Magnificent Seven ranged from about 48%, I think it was, to 249%. What we're hearing from clients a lot is, should we just cut bait now? Should we be done with it? I mean, this must be so frothy. However, if you think about what was driving this wave of growth, this AI movement, I think we still have some upside, and we like to barbell. We like the mega cap tech stocks, but we also like to barbell with the small mid cap growth names in the public sector. And also we like playing it on the private markets to look for that innovation, and a strong founder pedigree is really important when it comes to that.
Why only neutral on the U.S., given all that's gone on? We've come so far. The Fed's just about done, we think. Next move's probably a cut. At least that's what the market view is, and maybe several of them. Economy's been hanging in there. Earnings are likely to be okay. Isn't that a case to be better than neutral on U.S. equities?
Well, it's a question of opportunity cost, Scott. I mean, back in 2022, where interest rates were barely giving you anything, I basically had to eke out all of my returns through my equity exposure. Right now, we're in a world where my fixed income is giving me great mid to high single-digit growth, and not at a lot of risk. And so it's really more a question of, where do I want to be? I can have the same kind of return with lower risk, and maybe less return. I'm not saying I don't want to be in equities. I want to have exposure. But I can get, in a well-diversified portfolio, I'm getting a decent amount of return, and I'm able to lower the overall risk of the portfolio. And so whether I'm looking at fixed income, and we're actually extending duration within our fixed income portfolios, understanding that the Fed's probably going to cut rates, and so whether it's intermediate or longer term on the Treasury and on the corporate bond side, so it really isn't a question of disliking. It really is a question of, what do I like more?
Oh, sure. No, I think I was even posing it, I guess, in my own mind of saying, why not even like it more? Because your sector picks sound a little more offensive. Now, I'll say you like utilities, not obviously, and generally speaking, an offensive way to play things, but small caps, industrials, tech, right?
Well, let me talk a little bit about utilities. And utilities, for me, has more of a play around the energy transition economy. I don't know if you saw, Scott, today there was a headline that showed that 2023 was the hottest year on record. And that's beating 2016, and the pace of warming was pretty alarming. For us as investors and working with our clients, we're looking at ways, how can we invest in these themes? So that goes to the utilities, that goes to the industrials, technology as well, because we want to be investing in renewable energy, in smart grids, in electrification. And so really that was more that play. Yes, a lot of the positioning that we're talking about within equities are looking at an opening up around small cap. There's cyclical names, there's cyclical sectors. But that's a realization that as the Fed settles into, hopefully, a soft landing. And just the other day, I heard someone talking about potentially having a rate hike. Not that I think that's the case, but, in the back of your mind, when you hear that, you always know things are not quite hunky-dory yet. So it's a soft-ish landing, if you will. And so let's watch earnings to see if there's really growth behind this, if there's really solid balance sheets, if the consumer remains resilient, to see if this really has some legs.
All right, we'll see. Yes, we will. Angela, I appreciate it very much, and we'll talk to you soon.
All right.
All right.
Take care.
Yep.